How to set financial goals for the year. Setting financial goals is an essential part of achieving financial success. It helps you to focus on what you want to achieve, create a plan to get there, and stay motivated. In this blog, we will explore the best real examples on how to set financial goals for the year. Determine your financial status. Before you start setting financial goals, it's essential to understand your current financial status. Determine your net worth, monthly income, expenses, and debt. This information will give you a clear picture of your current financial situation and help you set realistic financial goals. For example, if you have high credit card debt and limited savings, your financial goal could be to pay off your credit card debt and build an emergency fund. Identify your financial goals. Once you have a clear understanding of your financial status, the next step is to identify your financial goals. Financial goals can be short-term, medium-term, or long-term. Short-term goals are those that can be achieved within a year or less. For example, saving for a vacation, paying off a credit card debt, or building an emergency fund. Medium-term goals are those that can be achieved within 2 to 5 years. For example, saving for a down payment on a house, buying a car, or starting a business. Long-term goals are those that can take more than 5 years to achieve. For example, saving for retirement, paying off a mortgage, or funding a child's education. Make your goals specific, measurable, and attainable. When setting financial goals, it's crucial to make them specific, measurable, and attainable. Specific goals are clear and well-defined, making it easier to know what you need to do to achieve them. Measurable goals allow you to track your progress and see how far you've come. Attainable goals are realistic and achievable, given your current financial situation. For example, instead of setting a goal to save money, make your goal specific, measurable, and attainable by saying, "I will save $500 per month for the next 6 months to build an emergency fund." Create a plan to achieve your goals. Once you have identified your financial goals and made them specific, measurable, and attainable, the next step is to create a plan to achieve them. Your plan should include specific actions and timelines to achieve your goals. For example, if your financial goal is to pay off your credit card debt, your plan might include making a list of all your credit card debts, prioritizing them based on interest rates, and creating a budget to make extra payments. Track your progress. Tracking your progress is crucial to achieving your financial goals. It allows you to see how far you've come and make adjustments if necessary. There are various tools and apps available to help you track your progress, such as Mint, In-App, and Personal Capital. For example, if your financial goal is to save $500 per month for 6 months, track your progress by using a budgeting app to monitor your expenses, adjust your spending habits, and ensure you're on track to meet your goal. Real examples of financial goals. Now that we've covered the basics of setting financial goals, let's look at some real examples. Pay off credit card debt. One of the most common financial goals is to pay off credit card debt. Credit card debt can be a significant burden on your finances, and the high interest rates can make it difficult to pay off. To set a financial goal of paying off credit card debt, start by listing all your credit card debts, prioritizing them based on interest rates, and creating a budget to make extra payments. Set a specific, measurable, and attainable goal, such as paying off $5,000 in credit card debt within the next year. Create a plan to achieve this goal by allocating a portion of your budget each month to pay down your debt. Use a budgeting app to track your progress and adjust your spending habits as needed. Build an emergency fund. Another essential financial goal is to build an emergency fund. An emergency fund is a savings account set aside for unexpected expenses, such as car repairs, medical bills, or job loss. Experts recommend having at least 3 to 6 months of living expenses saved in an emergency fund. To set a financial goal of building an emergency fund, start by determining how much you need to save. Set a specific, measurable, and attainable goal, such as saving $10,000 within the next year. Create a plan to achieve this goal by allocating a portion of your budget each month to your emergency fund. Use a budgeting app to track your progress and adjust your spending habits as needed. Save for retirement. Saving for retirement is a long-term financial goal that requires planning and consistency. Retirement savings can come from a variety of sources, such as employer-sponsored plans, individual retirement accounts, IRAs, and personal savings. To set a financial goal of saving for retirement, start by determining how much you need to save. Set a specific, measurable, and attainable goal, such as saving $500 per month for the next 30 years to retire comfortably. Create a plan to achieve this goal by contributing to your employer-sponsored retirement plan, opening an IRA, and setting up automatic transfers to your retirement accounts. Use a retirement calculator to estimate how much you need to save to reach your retirement goals. Save for a down payment on a house. Saving for a down payment on a house is a medium-term financial goal that requires discipline and planning. The down payment is the amount of money you need to put down when buying a house, typically ranging from 5% to 20% of the purchase price. To set a financial goal of saving for a down payment on a house, start by determining how much you need to save. Set a specific, measurable, and attainable goal, such as saving $30,000 within the next 2 years for a 10% down payment on a $300,000 house. Create a plan to achieve this goal by allocating a portion of your budget each month to your down payment fund, reducing your expenses, and increasing your income. Use a down payment calculator to estimate how much you need to save to reach your down payment goal. Conclusion: setting financial goals is an essential part of achieving financial success. By determining your financial status, identifying your financial goals, making them specific, measurable, and attainable, creating a plan to achieve them, and tracking your progress, you can achieve your financial goals and improve your financial well-being. Real examples of financial goals include paying off credit card debt, building an emergency fund, saving for retirement, and saving for a down payment on a house. By setting specific, measurable, and attainable goals and creating a plan to achieve them, you can reach your financial goals and live a financially secure life. Remember, it's never too late to start setting financial goals. Start today and take control of your financial future.